But, Jim, you said it best before the top of the hour. This is a nice opportunity to maybe set aside the GameStop myopia and focus on some companies that have broader implications for stocks.
Look, it's fun to focus on GameStop. It's just this great diversion. It's kind of like a WWE. But here's the deal. When I look at these numbers, J&J, when I look at Raytheon, when I look at 3M, what I say is, how can these guys pull it off? When I look at GE, I'm thinking Houdini, miraculous. This is incredible. Can I just say that when you look at Raytheon and you look at General Electric, David, has it occurred to you that nobody's flying and yet they're crushing it when it comes to aviation?
Yeah, well, crushing it, yeah. Give us more, Jim. When you talk about aviation, are you speaking specifically about which company or both?
Both.
Because GE obviously succeeded in part by cutting costs in other areas and by great, real actual growth in renewables in that area.
And Raytheon cut a tremendous amount of costs. I'm just saying that if you adjust the baseline, it's surprising that they didn't have a dramatic fall off versus last year, which was an amazing quarter. Larry Culp, correctly, you point out that the wind business, the hydrogen turbine business, these are growing businesses now, healthcare growing business. The free cash flow of both these companies, Raytheon and GE, is rather surprising. Carl, the tone is being set once again by companies that are doing much better than we thought. And it makes you feel like, wait a second, the market went up a lot. Maybe it should have. And I'm not talking about GME, GameStop. I'm not talking about Bed Bath & Beyond or BlackBerry. These are big companies. And, Carl, these are astounding numbers.
It's true, Jim. And it takes us back to the narrative we've been talking about for months. That is a big corporate cost-setting reset. And then to your point about industrials and healthcare, look at 3M's individual silos. Safety industrial up 11, consumer up almost 10, healthcare up better than 6. That's a good example of what we're talking about.
You know, when I look at those, I mean, we could have looked at these same numbers from 3M and seen negative, seeing minuses. Mike Roman is beginning to work his magic. And I say magic, it's just because David's right. It's cost takeout. By the way, I don't know how it's even possible that Greg Hayes is taking out more costs. But you look at these businesses and you're seeing organic sales grew in medical solutions for 3M. Organic sales move in automotive. How about this? Organic sales in aerospace. Of course, transportation safety. David, we have to start thinking about the fact that maybe there is a moment in this economy where, let's say there's a pause. Let's say 20 to 21 are just pause years, and we get to 2022, which I think people will be looking at. There could be some amazing, reasonable expectation about why the multiple expanded for the S&P 500.
There could be, without a doubt. And I mean, these are just a handful of we've got so many more companies this morning, whether it's Verizon or J&J or American Express. But I did want to come back, though, Jim, to this. Let's not forget, Raytheon's cut a lot of jobs. GE's cut a lot of jobs. So when you talk about a recovery in the economy, 16,500 headcount reduction, roughly 20% of commercial aerospace reduction at Raytheon. Headcount and structural assets.
They had to. They had
4,500 contractor roles.
They all took pay cuts.
More than a 55% reduction. Furloughs, hiring freezes. By the way, all of which they needed to do to be able to complete their $2 billion of cost initiatives that they undertook last year. Obviously, this is things we'll discuss with Greg Hayes. We always appreciate him being fairly forthright when it comes to these kinds of issues. But let's not forget, Jim, there's a lot of jobs that are no longer there. And that's why some of these numbers are looking better and being applauded by investors.
They also did cut R&D. We got to mention that. And they also had a merger with Raytheon, so they had actual cost takeout.
Yes, and there's some synergies, right?
Right, they had synergies. But David, you're right. I mean, are they growing their way out of the situation? No, they're cost cutting the way out of the situation. Is GE growing out of it? I could say they're cost cutting. 3M is growing out of it, and I think that we have to distinguish. J&J is just doing its thing. But I think these companies are remarkable. Carl, I'm not saying celebrate the earnings at a time when a lot of people are losing their jobs. I am saying I can't believe how much money these companies can make. When you look at J&J, it was only up $1 initially. And I'm thinking, has anyone read through the line items? I mean, look at this company. It was down that dip. That dip was caused by talc. It was your last buying opportunity. Alex Gorski has done magnificently, and now they're teasing us on the, well, that's not fair. They're going to have some information, but 100 million of vaccine vials? You know, Carl, I'm coming back to my glut in Q2 of inoculation. Glut of vaccines.
Shepard Smith here. Thanks for watching CNBC on YouTube.